All right, it's Saturday morning. I want to be very brief. This is the second attempt, and I don't have enough time to talk about all the things that I try to talk about. I will say this on Bitcoin, just follow the market if you follow my post, my videos. And on Bitcoin, I just want to give you a picture, and then I got to get off of it. Otherwise, I'll speak for 20 minutes. I'll lose, or I don't have 20 minutes. It's 19 minutes, and then it's hold on. Let me stop talking and show you this so I can save a minute. Hold on. And so you can go back to the video on Bitcoin, but this is a great trade here because the market basically um, came to where I would expect buyers. And there were lots of reasons. There were extensions. It doubled the range of the range box. This is a support area. I added another line. And the market's here, then it goes higher, but it touches this bar here. Let's see if you can see it. This is a balance. It's an important line to me. It's near the 4,000 or $40,000 layer level here, but this is a long trade for the reasons I described before. And so far, it really hasn't moved. It moved a little bit lower the following bar. This is a daily chart, but uh, I would be in this market here. My stop has to be somewhere here. I'm not going to be a signal service, but if this is going to work, I'd be long here, and I expect the market to go to here and close the gap. That's the gap, or go to the top of the bottom range box. You know, this is the range box, and here's another one. And we could make decisions as the market goes higher. But I would be a buyer in here on a different day, one of these days. You just go to the video, whichever day it was, and I'd be looking on a buying tail to buy, and I don't want a big stop. But if my stop, if I see, I can't remember this. I can't remember if I told you the market, you're long here, and then I have a stop below here, but I didn't say how much. Well, the next day it went a little bit lower. So, you know, I don't want to get stuck on minutia. But basically, hold on. So basically, I had to clear my throat. I'd still be in this trade if I were trading it, and I would try to trade it to here, and I'd be watching it, and I would know what my stop is. And if I can't have a stop that's small enough to be useful and allows me to sleep, I can't take the trade. If I need a stop down here somewhere, there's no, because this is the measured move from here to here, that's the 2. Right now it's at the 1.618. If I needed it here, I'd never take the trade. And the only way I can sleep and not be up all night for 3 or 4 days is to have a stop that I believe in. And if it goes to that point, it stops me out. That's life. I'll have an alert on Tradingview, but I'll also have an alert from the broker. And if I can't live with that stop without looking at it all day long, I'm out of control of my trading. You just can't do it. You can't trade like that. You have to be able to walk away, and periodically you might want to check your you know, that things are going well, that you actually still have a stop, you know, and things like that. But you've got to be able to sleep. It's a real critical part of not burning out when you trade. But I think this is going to deliver something profitable. Now, if the market gets to here somewhere, it's still, and it doesn't get to here, let's say it gets up to here, it's a very profitable trade, but I may change my decision, because if I have a small stop down here and I'm getting into this area and it gets to here, that's thousands of dollars. It's I don't worry too much about risk reward, because my stop is usually a very small stop, and it's not based on structure. If I were getting long here with what I would call a structural stop, I'd say something below here would be the structure. And I'm not going to have that stop. But my patterns, the way I look at them, are so accurate. By far and away, this will work more often than not. It doesn't mean it's going to go exactly to my target, but this is going to take out some of these breakout sellers. That's what likely is going to happen. The probability is that um, the market will, if it starts moving higher, will accelerate as sellers buy to close their short positions. I'm working on the dynamics of buyers and sellers and how a seller would behave to this market if it moves higher. They'll become buyers. The higher it goes, the more it'll accelerate because more and more of these sellers will realize this is not going lower. It's going to come back and test them. And they'll be part of the reason why it's coming back because sellers become sellers. Breakout sellers will be buyers and they'll feed the direction of the market higher if the smart money can. And I think that's how I look at this. I can't prove who that is, but this is how I say it. If the smart money is here accumulating or well, they could be accumulating. They could be buying into this. You have to see how it trades. If it trades with a kind of like this trend line here, and it's kind of failing to make new lows, and it looks like there's accumulation, and the smart money is holding this higher. Sellers try to sell it, they fail. The market eases its way up, but doesn't make new lows, and you'll see a behavior that hasn't happened yet. So, but this is a good trade. We're still in it, even if it's not extremely profitable. You want to look at markets like this and then learn how to put your stops in that you can live with, and then don't obsess over it. Spend time looking at something else. That's more time than I wanted to spend, but it's 7 minutes, so I have a few minutes left. There's a market that I wanted to talk about. Head and shoulders. I just don't feel like doing it now. I want to talk about a market that one of my students was looking at, and well, I was going to say she's never traded it. Well, actually, she did trade it, um, and but when she told me about it, I said, don't trade it because I don't know much about Palladium, but I know it's a volatile market, and I'm just not familiar with it. So, but I want to talk about it, and even when I look at it, and I don't know what the margin is on it, but I know my student has a much smaller account than I do, and she accidentally, you know how that goes, pushed the button, and she thought she was paper trading, and she realized she was in the market, and they let her take the trade. So, and I know that if she can take the trade, um, the margin isn't over the size of my account. So in other words, it's a tradable market. And then she got quickly out of it. She made $5,000. So she's all excited. Not exactly the way I wanted to trade, but it became an interesting market. And then I looked at it a little bit. So I want to show you how to plot it. It's a market I will have to know more about. I don't know how the fills are. I can look at it. I know it's a volatile market, which is what I like, but you have to be careful of the fills. And I don't know how dangerous it is. I don't know what the liquidity of it is. Um, my guess is it's probably as risky as silver, but I don't know. But I want you to see the pattern and how I evolve my thinking on this market, looking at the charts the way I look at them. So this is a monthly chart. This is the bottom. This goes back to 2003 or 4, whatever it is here. And from the bottom to the top, and I do this because I want a fairly broad range. I don't know if I want to do it, have a pivot here, here, here. This is good enough. And yes, it was lower in the 1990s. And what's scary about this, I was trading during these days too. They don't even have when I started trading. Well, actually they do. I think 1985 is when I started to really start trading. So we're not going to do this, but this is close enough. And this is how I chart with retracements. And from the bottom to the top, the market got to a 50%. And I like the way it's trading. I like the cleanness and the volatility. Sometimes you won't be clear about volatility, but you will if you do this for a matter of months. It'll resonate. when you see markets like this. But usually when you put a few sets of lines on them. So I want to get a little more detail just to show you the consistency in your thinking. And I'm not going to draw range box. Well, yes, I will. But if the market had been over here, the first thing I see is this. And I would pretty much have range boxes that are close to this. This ends up being, let me see what the range is. I haven't done this part of it. And so 1 point, according to my student, is $1,000, and 5 points is $5,000. So she made 5 points, and this range is 248 points. So you can figure out what the dollar amounts are with that. And if I were looking at this, what happens? Well, if the market doubles, it goes higher. If the market goes higher, it'll double. If it goes lower, it'll double. But so what it did is it doubled. So we clone it, and we trade it as a very tradable range. And actually what it did, I'm going to displace a little bit. Again, I haven't done this yet, but it did find double tops here, and it did correct. So it would have been useful. That's how I'm going to say this. But if you only traded the range, it doesn't matter. This is how I chart. So this is what it is. And if I put another box up there, it wouldn't fit as nicely for sure. Let me put it up there. And I would have other tools. I'm just looking at boxes because it's easy to see. I'm just looking and just looking at the market. What do I see? And that's actually pretty close. That's pretty close. So it traded by doubling boxes. And then here I would have told you it corrected 2 boxes, went up 3, corrected 2, and it came to support here. If you brought this out here, retest this breakout higher, maybe do a trade like this, fails to make a new high. So that's how I use the boxes. Let's take them off. And then what happened is the market reversed. So it's interesting to me because when I see something like this at a double bottom, I think, is that even a 382? So I draw the line from here. Well, I draw the retracement from here to here. It can't even get to the 382. And while the market closes this gap right here, so it closes the gap, it doesn't close this. Well, if it can't close the gap, it can't even get to the 382, and it starts to go lower. You draw an A, B, you do an A, B, C, D pattern. A, let me turn this off so you don't get distracted. This is your impulse move lower. It can't even correct 382. It can't close gaps. It starts going lower. That's your ABCD pattern projecting where the market will go. And there are support areas. There are 382 retracements, 50%. There are other tools that we use. But when a market does this, when it goes like this is a double bottom. This is a double bottom. Go long. Where would you expect it to go? To this line. It's a support line. It broke the support line. But if it can't close the gap, what does the market do? It starts going lower and makes new lows. So just think about it. And then what I need to think about this is if I want to trade this market. And I'm getting ready to trade silver. And I'm trying to do some things with my broker that are a little bit, I'm going to need to see some videos. I want to get some things started that I'm not current on. And I don't want to get into too much detail, but I'm looking to trade these markets, and I may include this. But what you want to be careful of is, and I'm telling this to my student, you can look at minor patterns in the market and they're actually very profitable because I can't remember where my student was talking, but it was in the last week, and she's making a $5,000 trade somewhere in a market like this. And that's okay because these are significant, these are clean lines, but you don't want to just jump and try to trade individual bars. And there are relationships to them. The market gap lower, and you can trade gaps and things looking at a small region of price. But remember, markets do this. And if $5,000 is buried into this, in each bar, you need to be careful because um, you could get really burned in a bad week or two trying to scalp individual bars on a daily chart with a market with this kind of volatility. But it probably is tradable, and you probably want to look at the bigger patterns. Here you'd be drawing maybe a measured move and looking for a double bottom, or you use the information from what I drew earlier to find support here. And you want to use the bigger context of the market, even if you're going to scalp the market. It will help you avoid frivolous losses in a market um, where you're not looking, you don't want too much detail, but you want the detail of larger time frame patterns. And I'll leave it like that. So this will be an interesting market. And my student will hear for the first time, if she is still listening to the videos, that we may be looking at Palladium, and she's all excited about her first trade in Palladium.